It's a lot of effort. It's a numbers game, and you got to have the mindset, to get kicked in the teeth every day and then wake up the next morning and do it all again, knowing that eventually you're going to hit one. We're really disciplined in the assets that we buy. We have a really low strike ratio, and we're looking for institutional quality assets. So we're always bidding against big institutions, Blackstone and Greystar, and losing very regularly to them.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest started buying commercial real estate 24 months ago. He started that business. He and his business partner purchased their first piece of commercial real estate 16 months ago and are now competing on $50 million projects against institutions like Blackstone. His name is Ryan Webster. He's a real estate professional, entrepreneur, and an NHBA award-winning home builder. Ryan is a founder and managing partner of Equity Yield Group. They specialize in multifamily. You're going to hear numerous things today about, $50 million project, competing with Blackstone. How did they get there? And how did they do it so fast? I know you're going to learn a lot today. Ryan, welcome to the show. Give the listeners a little more about, or tell them about, who you are, why real estate, why commercial real estate.
Yeah, absolutely. Thanks for having me, Whitney. I'm Ryan Webster. I'm a real estate professional and entrepreneur, founder of Equity Yield Group, and we're a focused acquisition investment firm. We acquire institutional quality A, B class multifamily assets kind of across the Southeast. Prior to multifamily acquisitions, I owned and operated a construction development company for the better part of a decade. And then recently, about 2 years ago, transitioned over into acquisition of stabilized assets instead of building new assets, stabilizing them and selling them, and mitigate some of the execution risk and the availability to take advantage of the tax benefits with depreciation of stabilized assets, a little more attractive debt, walking in with cash flow day one.
Okay. No, that's awesome. So you have a construction background. I would imagine that's pretty valuable when doing value add or repositioning large commercial real estate.
Yeah, absolutely. And even just with the general maintenance and repairs, having that background knowledge is very helpful. But we do look for a light to moderate value add component in most of our deals. So I do lean on that background very heavily.
Nice. Well, I want to jump right in. I know a little bit about you. Just so the listener knows, you've acquired 665 units in the last 12 months, about 165 million, worth of assets. So let's talk through that a little bit. I'd love to know how did you do that? I know the listener's thinking, man, I wish I could do that. You're right. Or wish I had done that. Give us some background on how you make that happen. How could the listener, what does the listener need to have in place to be able to purchase that many assets or units in 12 months?
The first real thing, and I think this is important, not only in real estate investment, but in business as well, is really, determination and grit, especially in real estate.
You're saying it's not easy, right?
It's not. It's a lot of effort. It's a numbers game, and you got to have the mindset, to get kicked in the teeth every day and then wake up the next morning and do it all again, knowing that eventually you're going to hit one. We're really disciplined in the assets that we buy. We have a really low strike ratio, and we're looking for institutional quality assets. So we're always bidding against big institutions, Blackstone and Greystar, and losing very regularly to them. But when we do win one, it's a very quality asset, and we'll have the opportunity to sell back to Greystone and Blackstar when we're ready to disposition.
What size project are we talking about to be competing with guys like that?
Kind of our average acquisition is really 50 million. We don't do anything under 100 units, but it's very location driven, kind of in and around primary markets across the Southeast.
So what has helped you to be able to play really on the big boy stage, right? I mean, you're not, you're not just competing with the average Joe there on these projects. Give us a little background of your company or your brand or your team or whatever that is that's helped you to be able to compete for a $50 million project.
Yeah, I mean, it's really, it comes down to myself and my partner, Warren, and really, when we set up this business, what we set out to do and how we are, as individuals and as, business people. We tend to be very organized and very proactive in problem solving. And we've done a real good job of being easy to work with by virtue of being organized, and people like to work with us. And that kind of includes the sellers. We do our best to get through the contract period as smoothly as possible. Typically, we're turning around PSA in anywhere from 3 to 5 days. Usually run pretty clean due diligence process. And, the last year, everyone's been slammed. The lenders are busy, third parties are busy, legal's busy. So we're typically, if we're getting into LOI and moving towards PSA, we're ordering third party reports. We're getting the lenders going, getting the legal process going, and pushing everyone on the team along as early as we can to make sure that we're closing on time or early. And that's allowed our reputation to precede us.
So how long have you all been syndicating or actually purchasing commercial?
Yeah, so we started the company about 24 months ago.
Okay.
And then acquired the first asset 16 months ago, and then kind of snowballed after that.
Nice. Okay. So, and I guess, what I'm thinking through, like, I don't know too many people that in 16 months from the first project or even 2 years from starting, are buying $50 million projects, right? That's pretty impressive. Congratulations, by the way. That's great. And so, how are you raising money that fast as well? So, imagine if you're buying a $50 million project, maybe you're probably raising 30 million, maybe, depending on the project, I'm sure, or CapEx. Tell me about, how in 16 months you're able to raise that kind of capital.
Yeah. And again, this is not the first company that I built and ran. So we've got some relationships that came along with that. And being on the development side previously, the capital stack on development deals is usually put together a little differently. You'll have your senior debt, a mezz piece, preferred equity piece, and then the common equity slug we usually brought in-house from the company, but it typically only represented maybe 5-10% of the total equity. So depending on the deal and the needs of the project, we do use kind of a diversified capital stack where we have some preferred equity institutional funds that we work with. And we've placed mezzanine debt on some deals before. And then the common equity slug is, friends and family and bringing other co-sponsors into the deal to raise from their network.
Okay. What about just the confidence of syndicating these deals? Did you have a mentor, or did you part of some other mastermind or group? I just like going, from construction business to syndicating, purchasing $50 million project. Most people are, and I think this is a limiting belief. I don't believe this, but a lot of people in our industry, do, or in other industries and other parts of real estate will tell people, well, you need to start small, right? You need to, why didn't you buy that fourplex first, Ryan, or that, 12plex even? But man, in 16 months, you're doing a $50 million project. So did you just have the skill sets from other businesses and construction? What was that for you?
Yeah, a lot of the skill set did come from, business experience in running and operating other businesses. But I did meet my partner, Warren, through a Think Multifamily platform with Mark Kenny. And I will say, having gone both routes, there is a lot of value in mentorship. And there's just things that you have to be learned the hard way, but you don't necessarily have to learn it through your own experience. You can learn it through someone else's experience. I think that's where the value of mentorship comes in, is being able to kind of dodge some of these obstacles by being able to leverage the knowledge and experience of someone who's been there prior.
No doubt about it. I couldn't speak highly enough of Mark and Tamil and Think Multifamily Group. I know tons of people in that program and group and that have had much success. So I actually just had a conference this past weekend with Mark and Tamil and just always enjoy catching up with them. But I would say, yes, a mentor is just crucial. Help speed things up. You said it well, as far as, let's learn from somebody else's hard knocks, right? And so I could not agree more. You even met your partner through that group. Speak to your partner's roles versus, your roles, and why or how did you all know that was going to be a good fit or partnership?
It really came down to, I guess it developed very organically, which is rare and very convenient. But it came down to our investment strategy and thesis. We were looking at a lot of the same deals, a lot of the same markets for a lot of the same reasons, and got working together, and then kind of kept working together. And it worked real well, where the things that, I didn't have time to do or didn't like to do, he would jump on, and vice versa. As far as, the acquisition side, we both play a role in there. It's good to have a couple sets of eyes, especially now when you're underwriting deals. And really, to win a good investment now, you have to see something that someone else missed and have support for the valuation and be comfortable with the basis right now. So having two sets of eyes, really digging the data, helps quite a bit there. And then really tend to take the lead more on the operations side. And then Warren kind of puts together the the team for, the acquisition and moving into the contract period.
That's helpful, right? And I think like listeners need to hear too. Like I hear it all the time, whether it's hiring or not hiring a mentor, to partnering or not partnering. A client of mine I was working with yesterday, he was asking about a partnership. Should we partner? Should we not? And maybe you could speak to this, because I was just thinking through some things. He needs to discuss with his partner before they actually say, "Hey, we're doing this together, right? We're under the same brand, or we're moving forward together." Would you shine a light there as far as, "Hey, I've learned this from partnerships," or "We made sure that we talked about these things before we said, hey, we're moving forward together"?
Yeah, I can speak a little bit on that. Initially, I didn't come in to the mindset of, hey, I'm going to have a partner. I came in as like, hey, I'm going to, just build another business and we'll hire out a team as the business scales. I just so happened to meet Warren, and we happened to click, and that's really where that developed. And I think that's really the most important foundation of any partnership is there has to be some agreement in what you're doing. What is the brand that you're building? Why are you building that brand? And for us, it was, started with the focus on our investment strategy, in this late model institutional quality assets. We didn't want to do, C-class heavy value add. We weren't really heavy workforce housing. We didn't want to do anything at tertiary market. So, we had an alignment in that. And then the next piece was really on kind of the brand. We're also passive investors, and we've had experiences where we've invested with other operators where we've had limited to no communication. We've had one excellent communication, and we decided, hey, we're going to be a very professional shop. We're going to send out monthly updates on the 15th of every month. We're going to be available for our investors at any time should they have any questions. And that kind of level of customer service and communication and transparency was something that was important to us both, and that we decided we're going to build this business. This is the framework that we're going to use.
Are you about to start a podcast or producing a podcast and tired of doing the editing yourself? We have produced over 1,000 daily shows, and the production team that I've created, they're now available to produce shows for you as well. We can do as little or as much as you need, from finding and communicating with guests, preparing introductions, to editing the audio and video. You will sound better, have a more professional presence, and be able to spend your time doing other valuable tasks on your business. Let me know you're interested by emailing me directly at whitney@lifebridgecapital.com. So I think you've talked about a couple times, at least even before we were recording, like doing ordinary things extraordinarily well. I don't think that's ordinary, right? I mean, that sets you apart in a big way. And we strive to do the same. It's a lot of people syndicate deals and buy commercial real estate, right? But man, there's always some that stand out more than others. And I would say you definitely are, if you're buying, moving that fast and buying $50 million projects. So can you speak to things that maybe that applies to the most, a few of the things in your business that, hey, you know what, we just strive to continue, just doing this extraordinarily well, even though most may seem this as a kind of a minor thing over here. Hey, we do it as best we possibly can.
Yeah. And, intrinsically, I'm just one of those individuals that, wakes up every morning trying to be better than I was yesterday. But it comes down to, the choice of, am I willing to compromise on this and punt, or do I want to, stick to what I set out to do? And, Warren and I choose, every day, every decision, not to move away from our investment criteria. There's a reason that we chose to invest in these type of properties with this investment strategy. And we're not out just to buy a deal to buy a deal. We want to buy a quality investment and provide our investors with a quality investment and great risk-adjusted returns. And, kind of the same thing goes with the communications and the transparency. We're just not willing to compromise, away from what we set out to build.
So speak to, maybe buying right now in the current market. You talked about like a disciplined investment criteria, and just speak to like how you're looking at these projects. And then I want to talk about even competing on deals with another group like Blackstone.
Yeah, absolutely. Right now it's tough. It's extremely competitive. Depending on the market you're buying and what property, it used to be you get to a best and final, you'd have, 3 people and you'd put in your bids and you'd have a seller interview, and then somebody would win. Now it's, best final, final, and sealed bids and interviews, and then maybe one more round. And
some people talk about they're told they're in best and final, but there's 25 groups in best and final.
Yeah, it's like they cannot be best and final. And so, yeah, it's crazy out there right now. And asset prices are absolutely insane. And, with the debt market shifting, and we knew that it was going to shift. And that's been kind of an important focus, even ahead of, the Fed's announcement to move the index. It was something that was new, was coming. A lot of deals last year were bridge debt, especially value add deals where you can cover the CapEx cost in the senior note, so a little lower cost of capital for the project. But, those bridge loans are variable rate. So we bought very aggressive rate caps on all of our floating rate debt, paid a premium for it. But now we're definitely glad that we did, mitigated the risk of kind of exposure to that raising index. But yeah, it's extremely, extremely competitive right now. But our focus is really on the fundamentals of the business in the property and the market that business is located in. And you're seeing, rent growth in some of these areas in excess of 30%, and asking yourself, hey, is this sustainable? No. One, it's not sustainable at that level. But two, how far will rents rise and what's reasonable? Will they plateau or will they fall? You really got to look at supply and demand of housing in that area. And, we're in the Southeast because there's tremendous demand for housing. There's, very high inbound migration. People are moving there every day. So the demand piece is there. And the next piece we look for is really, okay, what areas are supply constrained and are there barriers to entry for new product? And as long as we can say, hey, nobody's going to build right next door, and we're going to see, vacancy come up and higher concessions, we've got the one piece of, all right, there's a reason rents are coming up. It's supply and demand driven. The next piece is really affordability for us. Rents can continue to go up because supply and demand until people can't afford them. And it doesn't matter if you're charging, $4 or $5 grand a month for rent. People can't pay it. Your bad debt's going to eat you alive. And it's really about what you're actually collecting, not what you're charging. So we focus really on the income to rent ratios in the area and then the growing incomes in the area.
No, I thank you for laying that out like that. I think it's so smart too. It's like, well, rents may continue to rise, but hey, if the tenants can't pay it, it's not really helping you out here, right? It's just going to be bad debt. And so, no, that's just a great point. What about this trend in the real estate market? What do you see like over the next 6 to 12 months in real estate, and how do you feel about buying right now in your markets outside of what you just shared?
Yeah, no, I just think real estate's a great investment. I think there's huge value in being in hard assets and being in illiquid assets right now. And especially if those assets are generating cash flow. I think there's going to be some turbulence with the debt market as things level out. But compared to other investments, there's not a lot generating real net yield right now. Real estate's still performing very strongly, especially in these major markets. So, it's a place that we want to be, and it's a place our investors want to be.
What about, how do you prepare for a potential downturn? So you're buying a project, you feel really good about it, you're moving forward, but worst case scenario happens 6 months from now, something in our economy that's worse than we expected or whatever, like 3 bad things happen. You thought you were prepared. How are you ensuring that you are prepared for something like that?
Yeah, and that's one of the reasons we buy what we buy. We mitigate risk first in being in these strong and dense markets. If the properties we own only represent a very small percentage of the whole market, it's a big shift's not really gonna take us down, especially when you have very large, very dense populations that are supply constrained. But it really, for us, it comes down to cash flow. Does it cash flow? Will it continue to cash flow? And then if there is a downturn, we don't have to sell. We'll continue to collect cash flow. So that's really what we look for, is to get cash flow day one, have the ability to, force appreciation through, a light value add program, boost that cash flow, and then feel very well protected against the downturn.
Speak to how do you stand out against a group like Blackstone, or just thinking about the seller and the certainty of close, those things when you're competing about somebody like that.
Again, this comes back to being easy to work with. You can't be a pain in the butt to transact with, and that is really the only advantage we have against these institutions. They have huge discretionary funds full of capital ready to deploy. They have massive portfolios. So the only thing that we can really offer is to be easy to work with. We don't have a massive equity committee that's got to approve this deal. We're going to turn around PSA in 3 to 5 days. We're not going to drag it out. We're not going to have lengthy access agreements. We're going to be able to put up hard money day one. But that's really all we have, is to run a little cleaner and more efficient process than these big institutions can.
Do you think that goes back to like broker relationships, like having that broker relationship so they know that about you? Or do you think that's just assumed, hey, if we can do a deal with somebody smaller than something like a Blackstone, we're not going to have to go through all that process?
No, I don't think it's assumed. We do have to talk the brokers and the sellers through it and really, pitch them on, hey, what's the benefit of transacting with us? And, we provide them our transactional references. And, anybody who's ever transacted with us does speak very highly of their experience with us, which is great and allows us to continue buying properties. But yeah, it's definitely tough, but we think it's worth it to have these better quality assets.
What's a way you've recently improved your business that we could apply to ours?
Really is just always focusing on the details. Like I said, with the shifting rate environment, we've kind of changed our underwriting to include, the forward rate curve on all floating rate debt. And then the assessment of, if you're planning to include a refinance in the property, I think you really have to have a consideration to how that refinance is getting sized. The last probably 12, 18, 24 months, everything has been LTV constrained because the debt service has been so cheap. Well, that's no longer going to be the case going forward. I think DSCR constraints going to be the thing sizing future loans. So I don't think you can just assume 75% LTV refi anymore. You're still going to have to hit that 125, 130 debt service coverage. And if the forward curve is showing, rates at 4, 4.5, 4.75, it's going to get very hard target to hit.
What about your best source for meeting new investors right now?
Podcasts like yours, honestly. That's where we get most of our traction for our retail investors is, hey, I heard you on such and such podcast, like what you're doing, like to talk to you more about what you're doing. How
do you think you stand out, when you're, presenting yourself, are you there on a podcast or just to an investor in general amongst other operators?
Again, I think, Warren and I set out to run, a very tight operation and a investment firm that provides, hopefully industry leading customer service. We want to be available to our investors, a resource to our investors. If they have a question, they can pick up the phone and call us. And then the communication and transparency. We have our updates. We send a full financial reporting package every month on the 15th, along with an asset snapshot. We track all of the key metrics, what our performance is versus what our projections were. So we lay it out for investors at any given moment. They can log in the investor portal and see where asset performance is on any one of their investments.
Nice. What about some daily habits you have, Ryan, that you are disciplined about that have helped you achieve this level of success?
Responsiveness is a big thing for me. And this is something, I learned running earlier businesses is, if it shows up in your desk or in your inbox, get it taken care of there. Things can snowball real quick if you're not responsive on them. And then they're fresh in your mind. You don't have to tune up and remind yourself, okay, what was this? What do I need to address? It's right there. Take care of it right there and then and move on to the next thing.
If you could pick one thing that's contributed to your success, what would that be?
Yeah, determination, really, and grit. Just like I said earlier, the willingness to get up the next morning and get up off the mat and do it again, especially when you're talking real estate acquisitions. We come in second place at a very professional level. We're very good at losing.
That's awesome. It's almost back to the mindset piece, right? The determination, the grit. You talked about getting kicked in the teeth and getting back up and doing it again the next day. You just know that from the beginning, right? What about, how do you like to give back?
Really, for us, it's about giving back to our investors. Being a real estate professional and investor, obviously it's about financial freedom for us, but being able to help our investors along their journey to financial freedom and provide them, quality investments that mitigate risk that they can feel good about being invested in.
Ryan, I'm grateful to have met you. I just think it's encouraging too that just kind of open the listener's mind a little bit to, hey, starting a business 2 years later, you're doing $50 million projects. That should blow their mind a little bit and just knock down some of those limiting beliefs. You and your partner are making it happen, to say the least. Hey, just congratulations on that success. And it's normally many years before someone's competing with a Blackstone type of group or for that size of project. So that speaks to those extraordinary things that you all are doing, I think in a big way that you're able to do that. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, no, and I mean, for that, you're absolutely right. It is limiting belief. You're your own biggest obstacle there. But yeah, no, you can get in touch with us. Easy ways on our website at equityyieldgroup.com. You can reach out and schedule a phone call with myself or my partner. You can subscribe to our newsletter and kind of stay up to date with things we're doing and things within the real estate industry.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.